So today, Bitwise launched a GameStop-focused covered call ETF. Now, we reported here on CNBC that the video game retailer announced late last month that it bought nearly 5,000 Bitcoin, adding to the growing list of public companies holding the cryptocurrency on their balance sheets. Can you take us through what prompted Bitwise to launch this new ETF tied to GameStop, and how are these covered call ETFs designed to generate income for investors?
Absolutely. Yeah, thanks for the question. One of the things about GameStop and one of the things about crypto that we know more than anything else is that they're volatile. GameStop is a famously volatile stock, and of course, crypto itself tends to be volatile over time. The beauty of covered call strategies is that they translate that volatility into income. We've seen success already at Bitwise doing covered call strategies on stocks like Strategy, like Coinbase, and others. And we thought, why not apply that to GameStop as well? It's a way for people who are excited about being long GameStop to maintain that long bias, but also generate really substantial income by translating that volatility into dollars in their pocket.
Now, in a news release, Bitwise points out that as of March 31st of this year, 79 public companies hold a collective $57 billion in Bitcoin on their balance sheets. That's a nearly 160% rise over the past year. What do you attribute that bump to? And generally speaking, why do you think public companies are betting big on Bitcoin?
Yeah, I think there are a few reasons for that. We think this is a megatrend, by the way, that's going to accelerate into the future. One, of course, is increased worries about the dollar. Corporations globally are sitting on records amount of cash, and what they've historically done is park it in short-term US treasuries or, in fact, in cash accounts. But with the huge money printing and growing deficits, that no longer seems like a valid approach. They need another way to protect their wealth from degradation, and they're turning to the best horse in that race, which is Bitcoin. Beyond that, the investing audience has just recognized that this is a positive strategy. And so companies are being rewarded for taking this bold step of putting Bitcoin on their balance sheet. We think there will ultimately be thousands of companies that do this. We think we're in inning one or two of this mega trend period, but you're seeing it accelerate over time. It's very exciting.
Let's turn to a big development for crypto, which is on the regulatory front. Last month, the Senate advanced the Genius Act stablecoin bill on a bipartisan vote. In a blog post after that development, you argued that outside of the January 2024 approval of spot Bitcoin ETFs, this is the most important regulatory development in the history of crypto and may even be bigger. I spoke with your CEO, Hunter Horsley, at Bitcoin 2025, and he told me he agrees with your assessment. You outline your reasoning in great detail in your blog post, but can you explain to our viewers why you think this development could be even bigger than last year's approval of spot Bitcoin ETFs here in the US?
Yeah, absolutely. I think it's a massive deal. Look, for crypto to really reshape how the world's global finance works, which is the market we're going after. That's how crypto goes from $3 trillion to a $30 trillion market. We have to be at the center of how global finance works. We need to rest on a strong foundation. Right now, crypto regulation in the US, which is the world's economic center for better or worse, rests on executive orders and legal interpretations. There's no laws that protect it for the long term. If we look back at the history of technology, we've seen major laws set the standard that allowed for, technologies like the internet to grow and dominate the market. We need the same thing in crypto. And the fact that we made it through the Senate, at least onto the floor, we passed the most difficult hurdle, tells me that we're going to get there. If we do get there, I think we're looking at the longest and most sustained bull market that crypto has seen. I think it takes us up a major leg in terms of what crypto can do.
Expanding on that, speaking at Bitcoin 2025 in Las Vegas a couple of weeks ago, Vice President JD Vance told attendees during his keynote address that he's optimistic that the Senate will pass a, quote, clean Genius Act and that the House will follow suit. However, I read that Republican Senator Josh Hawley is breaking with his party to oppose the Genius Act, saying that it should be struck down as it's written, fearing that it would be a huge giveaway to big tech. What would this mean for the potential advancement of the bill in the Senate? And are you still optimistic we'll see stablecoin regulation here in the US this year?
I'm still optimistic that we'll see stablecoin regulation in the US. It has bipartisan support, and more than anything, the US government actually needs it to pass in order to continue to fund the government. Remember, stablecoins have become a major purchaser of US treasuries, and the government is on pace to issue more and more treasuries, more and more debt. So I think smarter heads will prevail. I think we'll get this through the Senate. I think we'll get it through the House. I think it will be signed by the president. And again, I think that will set the stage for a major bull market in crypto that could extend for multiple years.
Expanding on that as well, in that blog post I referenced earlier, you argued that progress on the stablecoin bill could pave the way for a multi-year bull market in crypto, as you just mentioned. Last month, we saw Bitcoin hit a new record under $112,000. I heard you say in an interview in April that you expect Bitcoin to reach more than $200,000 by the end of this year. Are you still optimistic that could happen? And what are some of the other factors that would help catapult Bitcoin to that level?
Yeah, we still are holding by that prediction. I think that's how the market is setting up. When we look at the market, Talia, we see a structural imbalance between the demand for Bitcoin and the available supply. We know the Bitcoin network only produces 165,000 Bitcoin per year. That's the full supply. And we see demand from ETFs, which are pulling in hundreds of thousands of Bitcoin per year. Corporations, as we discussed, also purchasing hundreds of thousands of Bitcoin, and governments purchasing, in our view, hundreds of thousands of Bitcoin. As this structural demand supply imbalance plays out in the market, it's exhausting the available supply. We think we're close to breaking out to new all-time highs. And when we do, we think the market could run all the way up to 200,000. It would help if the US government announced net new purchases of Bitcoin for its US strategic reserve. It will help if we get passage of the Genius Act and maybe market structure regulation in the US. But even if those things don't happen, we think the demand from institutional investors and corporations and governments around the world are enough to lift this market much higher. It is just a fantastic setup for Bitcoin right now, with worries about the dollar, growing institutional demand. I think it's going to be a fantastic second half of the year.
And it certainly will be very interesting to see if your forecast comes to fruition. But in a blog post last week, you outlined a quote, different approach to thinking about Bitcoin's role in a portfolio, arguing that even though Bitcoin is a highly volatile asset, as you mentioned today, it doesn't mean that adding the cryptocurrency to a portfolio makes it significantly more volatile. You compared four portfolios with different allocations, one without Bitcoin at all, and the others with either a 5% or 10% allocation. What was your big takeaway from comparing those different portfolios?
Yeah, I think they're really two. The first is just because Bitcoin is volatile, when you add it to a portfolio mix, it doesn't increase the volatility of the portfolio overall because it's not correlated with stocks and bonds, right? That's the famous free lunch of investing. When you add a non-correlated asset, it can improve your risk-adjusted returns without increasing your volatility. But the other point I was making is something that I find when I talk to crypto native investors, which is that they tend to have very large allocations to crypto. And you might think that would increase the volatility of their portfolio, but they offset that by making the rest of their portfolio more conservative. Because they're taking a big bet on crypto, they don't need to take as big a bet on equities or on bonds. They can hold a significant amount of cash. And I think if you play with the ratio between the stocks, crypto, and low risk bonds in your portfolio, you can create some really exciting returns, really dynamic portfolios. The old days of having 60% stocks and 40% bonds, I think those are over. I think people need to move to a new kind of portfolio that looks at stocks, cash, and crypto and modulates the risk between them to get the kind of risk adjusted returns that they're looking for.
Interesting. Now, turning back to ETFs, Bitwise currently offers, of course, a spot Bitcoin ETF and a spot Ether ETF, but you also have pending applications with the SEC for spot Solana, Dogecoin, and XRP ETFs. So far, the SEC has postponed deciding on whether to give the green light to some of these proposed crypto ETFs. I know you can't talk about these specific filings, but generally speaking, do you think we'll see investment vehicles tied to these altcoins in the US this year, especially amid the backdrop of a more crypto friendly SEC with Paul Atkins at the helm?
Yeah, as you mentioned, I can't speak to our specific filings, but I can say that I think the SEC is moving in the right direction. If you look at what's happened since we launched Bitcoin and Ethereum ETFs, all they've done is that they've lowered the cost for investors and increased the security, right? We've dramatically reduced costs, we've dramatically improved security. They've been a net win for investors. What that tells me is that we can go further down the spectrum to these other alternative assets that people want exposure to, that they're currently buying exposure through centralized exchanges, which may have high fees and security risk. Why not allow them to access it in a safe, secure, low cost ETP format? There's no guarantee that we will get there, but if we're reading the tea leaves, we're very optimistic on many of these alternative assets. Not every crypto asset needs an ETP or should get an ETP, but we think investors want and should get exposure to more assets than just Bitcoin and ETH. And I do think we're going to get there towards the end of the year. The SEC is very constructive. They're open to discussion. It's a breath of fresh air, and we're really enjoying it here at Bitwise.